Hey, thank you for taking the time to click on today's video. Have you heard the phrase death and taxes? Well, all of us have, haven't we? And the reality is that if we're making money, that's great news, but with more income always seems to come more income tax. So the goal for today's video is to give you 3 really basic ways of being able to set more money aside and get a tax deduction for it, but also have that money set aside for future use like retirement. Now, the main premise of this video is going to be tax deductibility focused on that of business owners. In other words, individuals that may be working as their own contractor. Maybe they're a farmer, maybe they're a rancher, maybe they're a business owner that's selling clothing, or they've got automobile parts that they sell. It really doesn't matter. As long as you're able to itemize when you do your taxes, this is going to apply to you. So the first thing that we want to understand is we have the good old traditional IRA. If you're able to itemize your taxes and you know that you want some more tax deductibility to be able to pay less on income tax, the traditional IRA is about as simple as it gets. The traditional IRA affords you the opportunity of being able to put $7,500 into a traditional IRA in your name. If you're espoused and you have the income, you can also go ahead and put $7,500 into their traditional IRA as well. That's going to be $15,000 worth of tax deduction that you're going to be able to take right off the top and not pay any income tax on. If we need something a little bit more robust, now we're looking at things like a simple IRA. Now, simple IRAs are just exactly that. They're simple. There's not really any additional reporting for a simple IRA, but it's going to give you an opportunity of being able to have a much bigger allowance of tax deductibility for yourself. And not only that, but you can actually engage your business as an employee of that business and have that business kick a little extra in. So with the simple IRA, if you have the income, you would be able to put in a total of $19,000 into that simple IRA yourself. But then here's the great news. You can also create another deduction for that business, because that business is then going to be responsible for putting up to another 3% into that simple IRA for you. So you get a tax deduction as the employee, but then the business also is able to contribute, giving an additional tax deduction for it. Now, what if we need something even more robust? And this is kind of the biggest, baddest thing on the list. This is the thing that allows you a very, very large ceiling as far as tax deductibility, and it is referred to as the SEP IRA. Now, SEP stands for Simplified Employee Pension. It sounds more complicated than it is, but it's a very, very simple program. There really isn't much reporting to do at all. And the reality is that most custodians are able to set up SEP IRAs for you. And you can be an individual sole proprietor and have a SEP IRA. So if you decide to employ one of these, what is it going to produce? Well, the SEP IRA is going to give you the opportunity to contribute up to $66,000 and set that money aside as a tax deduction in one single year. Now, it's $66,000 or up to 25% of your compensation, whichever is less. So the reality is that when it comes to tax time, and we're dreading the tax time because we know we're going to end up maybe writing a big check for the income tax that we owe, realize that if you would do some work and some planning today and work with your CPA, work with your tax preparer, suggest to them that you're going to be picking one of these 3 and you want to be able to employ it to its maximum capacity, they're going to be able to help you with respect to telling you exactly how much you need to put in each one of these. Now, bear in mind that these accounts are going to have to be set up with a custodian. So whether it's, say, a brokerage account, or it's your bank, or maybe it's an annuity contract, one of these accounts has to be set up by the custodian in order for you to have a bucket to put that money into. But if you are looking for something that's very low cost, something that's very, very simple, and something that you can add to when you need the tax deductibility, These three are going to serve, generally speaking, about 90% of all the necessary need of tax deductibility in the world today for business owners. Thank you so much for watching. If you enjoyed this little video, maybe you learned a little something, I encourage you to give us a thumbs up, share this with your friends. If you like our little videos, hit that subscribe button and that little bell, and we'll notify you each and every time we have a video. Until next time, I'm Matthew Johnson, and remember, it's up to you to make today a great day. Thanks so much for watching.